Well, good morning. Welcome to the Data Explorers Securities Lending Daily Briefing for Monday, the 20th of October. I'm Ed Oliver. So this morning we're going to focus on some of the company news from the weekend's press and also look ahead to the next few days and see what may be influencing the capital markets and the world of securities lending over the next week. First of all, let's talk about Prudential. Julian Pitton mentioned Prudential in his roundup on Friday, in the news again over the weekend, aiming to raise cash to buy AIG's Asia business and focusing on potential cash raising from the sovereign wealth community. Always a popular move right now. Also, company-wise, in the Sunday Times yesterday, there was an article that said that mining had come off worse than banks over the last 3 months. We can have a look at the Desley global mining sector now. This looks at both inventory and loan movements in the securities lending business for this particular sector. And we can see that since the beginning of September, inventories come off very slightly, but the loan index, after an initial peak going up above 140, has really come off to below 110 during recent days. It'll be interesting to see whether that trend continues or whether the current stories will pick that up. Let's have a look at a couple of specific names now. Rio Tinto, one of the favourite names for stock lenders over the last year, mainly as a result of some of the stories in the M&A activity concerning BHP Billiton and Rio Tinto. And you can see at the beginning of the year, market capital on loan was nearly 14%. That's come off a fair bit now. It's nearer 6%. So not much new movement in respect of lending of Rio Tinto, but the price has come down as well, particularly since May. And I think you can see that the short sellers have been closing out positions since that time. But lots of stories last week about Rio Tinto and their view on the Chinese appetite for supply at the moment. So they're definitely in the news. We're also seeing a lot of activity in the last month to do with Lonmin. And basically that was the results of the ex-strata proposed bid that was then dropped on October the 1st, which, as you can see from this chart, really drove demand to borrow shares with over 11% market cap on loan at one point in early October. That's drifted back to about 8.5% now, but certainly something to watch there. So mining, definitely a sector that's in the press at the moment. And as I said, the Sunday Times speculating that mining has come off worse than banks over the last 3 months. Another story that hit the press over the weekend was to do with supermarkets and the UK supermarkets in a bit of a price battle right now to help customers through the credit crunch. And that's basically going down the line, down the chain to their suppliers. So speculation that their suppliers were being pressured to reduce prices as well. Let's have a look at a couple of those suppliers right now. Premier Foods, you can see loan around the beginning of May was at around 11.5%. That had come down quite substantially to around 5% at the beginning of October, but right now moved up to 7% with the last piece of data that we have. So there's some story there that we need to monitor quite closely. Very similar for Northern Food, 15% market capital on loan through March, April time this year. And right now they're at a similar level to Premier Foods with 7% market capital on loan. And we'll be monitoring that quite closely over the next few days here during the daily briefing. Other stories that came out over the weekend, ING were covered because of the Dutch government injecting 10 billion euros to assist in principally raising the Tier 1 capital of ING from 6.8% to 8%. That seems to be a sort of an early approach to trying to get ahead of the curve with ING. They seem a very safe situation, but the Dutch government taking steps to make certain that they don't or are not subjected to some of the stories that we've seen with other banks recently. Also South Korea, another government bailout story here, their government injecting $130 billion following problems with the currency, the Korean won down 40% versus the dollar, and also the stock market falls of recent days as well. There's concerns over the Korean banks, and the government stepped in there to help alleviate some of those concerns. So we'd expect that to be welcomed by the community there. Some of the things that we're looking ahead to the next few days, Julian mentioned on Friday that the Australian short selling ban, the temporary short selling ban, comes to a close on Thursday this week. So we'd expect that the Australian regulatory authorities will come out with some announcement over the next day or two on what they perceive to be the next stage, and we'll be looking at that very closely. And also tomorrow, perhaps a very important day, it's the deadline for insurers of Lehman debt to pay up on policies. There's an estimated $400 billion worth of insurance contracts, typically referred to as CDS, that are due to be covered tomorrow. Commentators are mixed on this. Some fear that some of those may go unpaid and are concerned about the impact on financial groups if that's the case. Other commentators say that those insurance contracts have been well hedged and actually they don't think there'll be much impact at all. So that's something we'll be watching extremely closely tomorrow and on Wednesday. So that's about it for today. Tomorrow's daily briefing will be hosted by David Rule, the Chief Executive Officer of the International Securities Lending Association. So join David tomorrow at the same place for more details on the Data Explorers Securities Lending Daily Briefing. Have a good day.